You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Mark Longo here from the Options Insider, and I'm breaking into your regularly scheduled program to let you know about a group and an event that I think may interest a lot of you. I know a lot of our readers and our listeners out there are interested in using and applying their options and risk management expertise in a lot of interesting new areas. And maybe you want to become a fund manager or an asset manager. Maybe you want to create a financial technology startup or become an educator. There's a lot of interesting ways you can apply that expertise. And if that sounds like you, well, then I have a group you may be interested in joining. It's called the Options Alliance. We're a group of active financial entrepreneurs and startups. We have a conference every year that explores all of the issues that are important to new startups and new endeavors in this space, including how to market your new venture, how to grow your AUM. Of course, it's a very important metric if you are an asset manager, and perhaps most importantly, how to fund all of those great new endeavors. It's a really unique event. There's nothing else like it out there. So if that sounds like something that might interest you, then clear your calendar for Monday, December 8th, and join us at the Arditi Center for Risk Management right here in Chicago. You can review the full agenda and reserve your seat at www.optionsalliance.org. And now I'll return you to your regularly scheduled program.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of analysis, a little bit of what's trading, sprinkle on some unusual activity and some listener mail, and you've got the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. A lot of great stuff cooking, including the impending 400th episode of the Option Block, which is crazy. I think if we stay on pace, it'll probably become sometime early next year, so maybe we'll have to have some sort of fun event or something to celebrate that. And joining me for today's pre-celebration episode, starting off with the man beaming in from the Options Express by Charles Schwab HQ, none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the show, sir.
Mark, good to be here. Another day where the averages didn't do much, but a lot of stuff going on in the market. Today, and the first day we've seen the VIX tick down, even in the rally mode we were in. So a lot of interesting stuff to talk about today.
Looking forward to it, but first let me introduce our other two compatriots here on the old All-Star panel, starting off with the man beaming in from the lovely principality known as St. Charles, Illinois, You know him, you love him as Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show, sir.
Excited to be here. Snuck a peek at the listener mail for the day. Excited about that. Excited about a lot of things that's happening. And Apple Gold and stocks are up today. What more can make life better?
Yeah, Apple pushing well past that century mark now these days. There must be smiles all around the Uncle Mike Tusaw RCM offices out there.
Gotta love it.
Gotta love it. All right, and speaking of things you have to love because it's required by law, you know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi from The Pit. Mr. G, welcome back to the show, sir.
That was like one of the better intros ever. Speaking of things you have to love, that just struck me funny. I'm sorry. I am well. It is chilly and looking kind of wintry.
That's pretty much summer in Maine, is it not?
No, summer in Maine is actually quite lovely. Winter, though, our winter is actually officially, I won't even dip my toe in the water anymore. It's way too cold.
All right. And with the team assembled, it's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. As the man said, this is the portion of the show where we break down what was moving, what was catching our eye in today's activity. And Alex hit the nail on the head. It wasn't, from a broad index perspective, the most scintillating of sessions. Most of the major indices, S&P and Dow included, closing fractionally up on the day. Q's up a little bit more love out there in tech land, but none of them even getting close to the 0.5% level, so really not much to write home about. And of course, VIX cash ticking off a wee bit, off about 0.17 on the day to close at 13.79. But as Alex alluded to, there was some stuff going on underneath there that caught our eye and was kind of interesting. Maybe since you alluded to it first, we'll give you pride of place here on the old trading block. What was it that really caught your eye, bubbling beneath the surface of today's market activity?
So there were a handful of things going on. First of all, a takeover story came in during the day on Williams-Sonoma, and that popped about 6 points. And we saw a little flurry of activity there, both stocks, some call buying. Keurig disappointed, lost about $12 going into the close. Two other big stories today. One was story hit the markets that OPEC was going to cut production. And that's been rumored for a while. And, we could spend a long time talking about what OPEC cutting really means. It means nobody cuts and everybody claims to have cut, but that gave a little trade lift back to crude. So crude came back up back over $75. And then two of the big NASDAQ stocks. We were talking about how well Apple has done, but one of the ones I watch is Amazon, which right at the close took out the 330 level. That's $50 off its low of the earnings disappointment. And it's not a 12-month high, but it's a near-term high. So some of the momentum stuff was doing pretty good today. And say the OPEC story gave a trade lift to oil.
Yeah, you're right. A lot of interesting stories percolating under the surface there today. You mentioned Amazon and some consumer electronics retailers in general. Of course, when you're thinking of those, you got to think of Best Buy as well. I think they surprised a lot of people this morning. It's been pretty much a consecutive story of decline for Best Buy the past couple of years, and that seemed to have come to an end, at least today, with the stock surprising everybody, closing up a little over 7%, or about $250 today to close at a little over $38 today. Surprise, surprise, the options also doing fairly well today. That's a name that does about 18,000 contracts a day, doing 75,000 today, about 2.5 to 1 calls over puts. That'll tell you, of course, not surprisingly, given the upside move in the underlying, that's where the action was. Net delta is about 91,000 long, so a lot of action on the upside of the chain, which is not surprising given today's movement in the underlying, but still interesting to see Best Buy perhaps having some signs of life when I think a lot of people had written them off as perhaps just a place you go to browse before you buy on Amazon or some of the other online outlets. And we talked about tech, so Mr. Apple devotee, Mr. Uncle Mike, what caught your eye in today's whirlwind, or perhaps let's call it a dust cloud of activity?
The dust cloud. Well, as Apple continues to go higher, it's kind of, I will say this. This is actually a dangerous sign for in the contrarian world. Walking into my Bible study this morning with a bunch of gentlemen, and none of them really do anything in the investing or trading world. And the first thing that I heard before we got started, one of the guys said, "I just put all my retirement, 100% of it, into Apple stock, and I'm doing well." And then the other guy that was next to him said, "All of it, huh? Well, maybe you should think of just putting all your money into the US dollar. That seems to be doing really well." So they always say that when the taxi drivers start telling you what stocks you should start looking for, that's the time to get out. So I have to admit that a chill went down my spine when I heard the talk about Apple earlier this morning. So that was how my day began. But then as time went by, what I thought was really interesting was how the markets opened up pretty far down on the day. I actually closed out a short call on SPY and took a profit there. I'm in a diagonal spread on it. And then as the day went on, got to sell another one. So I got to do my Grigas impression today of kind of being a day trader in a way. But it was a very interesting and fun day. But it's always fun when the things that you're in go up. Some days aren't so fun, though.
So it must have taken all of your restraint to not lean over to that gentleman and say, "Excuse me, sir, have you ever heard of a put? I'm proud of you, sir." It must have been very difficult for you.
Well, Apple's going to go up anyway, so that would be foolish.
You didn't say, "Here's my card, sir. I know how to handle these things." These Apple trades you're talking of.
Well, he said the amount of money that he had in his retirement, and the card stayed in the pocket.
Ah, I see. One of those, sir. Can't afford your doing stuff expertise.
Well, not for someone who wants to put everything into Apple. But
All right, speaking of doing stuff, last but certainly not least, we also have the Rock Lobster here, a man who is fond of doing a thing or two on occasion. Mr. Lobster, what stuff were you doing today?
I had to close I closed out an Intel position. I had scooped some calls in there, and it had ripped up. And I looked at it, and I'm like, okay, these calls are going to go out worthless that I had written against the other ones. All the positions made a little money. And I turned around, and it was blowing through the strike. What the heck? Intel ups their dividend to 96 cents. So, that bodes well again for technology. I'm not going to complain. It worked out fine, but there was no reason for me really to be in the position anymore. So I still have a holding in it, but that was just, I do trade the dips in some of the stocks that I really like when I think they get oversold. Either sell puts or buy calls, depending. But I saw, the funniest thing was this morning, we opened down and the kind of VIX spiked up to almost 15 again. And right from that morning tick, it just slowly disintegrated. Realized volatility is 3.5%. And I don't quite understand why vol has been able to hang at this level when the market's not moving. I think there's just too much thinking there's a shoe going to drop somewhere, because there's, like I've said before on the show, I think for us to really kind of rock it again, we need those willing sellers to take the vol down to low levels, because I think we closed another all-time high today, right? And the vol just can't get below this level. It kind of sits around the mid-13s, and it just won't go any lower. So I think when we see that, we go higher. But as far as a lot of scattered names and things like that, the underlying economy, at least in this country, is doing okay. So, and I would not be surprised if we have more of the same. So, and even stocks like Intel, even where Apple at its level is still not a ridiculously priced stock. Intel is, none of these are all, they're like 15 times earnings. They pay 2.5% dividend. So it's not like 2000 again. So there is room for stocks to go up as long as, there's, we kind of keep seeing this reasonable growth. And everybody forgets the Fed got out and stayed out this week. You had the open market committee meeting minutes, and they're like, okay, there's some stuff going on in the world, but we don't need to do anything. And, I read that as good. We had a crazy Philly purchasing managers index today, whatever the Philly Fed number is, highest level in like 20 something years. So, I mean, these are all like really bullish things. They're really good forward-looking things for stocks. And I'm not a huge, let's just say I'm not a seller of naked or uncovered calls right now. And I'll leave it at that. Sell them covered, but not naked.
No 1/8 ratios in your arsenal these days?
No.
You mentioned
chicken.
You mentioned the VIX kind of doing some weird things today. There was another SIBO, I suppose you can call it a product, also that's been performing a bit weirdly of late. Have you followed at all, Andrew, or maybe Mike, or even Alex, the SIBO's implied correlation index? You ever watch that one?
No.
Yeah. Neither have I, really. I just kind of saw some data on it this morning. It seemed kind of interesting. Apparently, they've done a good job trumpeting about this one because none of us have ever really done much with it or heard of it. But yeah, this is apparently their index that compares SPX option vols versus, I believe it's the top 50 of the S&P 500 names in there and how they compare as a basket and using the implied volatilities to measure the correlations. Apparently, the index has dropped a record 30%. In November. No one would know it, though, because no one's ever heard of this thing. But it is still, I think it's one of these interesting kind of esoteric products and quotes that they throw out there. They throw a time series that comes out once a day. You can have to check it that way, kind of like the skew index. But still interesting to note. So I guess none of us can talk about it, really, because none of us have played with it at all. I'm looking at the time series here going back, apparently, all the way to Jan 2007, which ironically is also the launch date of the Options Insider. So maybe there's some sort of there's some correlation there we should mine. But an interesting product nonetheless, and probably one we'll talk about a little bit more on the show once some of us have actually seen it in action.
One thing about the correlation is all of a sudden now, I mean, remember for a while, like everything was correlated. It was like, just everything moved together.
Yeah.
Right?
It was
and
the end of diversification.
And now maybe I think it's a good thing that maybe this gauge is, I'm going to take it as the gauge falls apart, that the correlations or everything's starting to kind of move in its own direction now. I guess we'll dig more into that one. We'll dig more into that one.
15, 20 years ago, correlation books were monstrous books on the street. And after Dodd-Frank, after 2008, I don't know if they all went away, but I don't think many of the firms still ran correlation / dispersion books. Not exactly the same thing, but that used to be an incredible business. And not really sure why it went away, especially from what you're describing, Mark, because it sounds like there's some money to be made there right now. But I don't know a lot of trading desks that do it anymore. Andrew, do you know anybody who still trades correlation or dispersion to a large degree?
Personally, no, not really. I thought a lot of them just got killed in 2011, and they kind of closed those books down. Remember we had that everybody got, I think, a little whipsawed by the government default, or saying they got the downgrade, and when the market fell apart, I think a lot of that trade as a technique went away in that one. So my short answer is no.
It's an interesting one, and you're right. It's something that has kind of gone away. It was kind of a banner period there for a while in terms of options making inroads into other spaces like financial advisors and asset managers, because when everything was moving in lockstep, that's when they all of a sudden started realizing, hey, this diversifying with 40 different underlyings doesn't really work that well anymore. Maybe we need a new approach. And so they started embracing options a little bit more gusto now that the correlation is breaking down a little bit. Maybe we'll see some of that fall apart. It'll be interesting to see. Meanwhile, though, we're going to keep on rolling with the show right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. You know the drill by now. This is the portion of the show where we break down what's catching our eye from an unusual activity perspective. Going to kick things off with a name. I do believe this is a newcomer here to the old Odd Block. This is Axiall Corporation, ticker symbol AXLL. Closing today, $44.03, up nearly $1.50, or about 3.5% on the day today. So not a bad day here for good old Axiall. And this is the name, does a whopping 273 contracts a day. So this is a market leader in every sense of the word. Doing today about 7x that, a little less, about 1,400 contracts going up today in Axiall. So overall, it wasn't the most market-moving name, but that's not always what we're looking for. We're not looking for 100,000 block going up in SPY or something like that all the time, even though those are interesting as well. We do like some of these more nuanced names where they could show a little bit of interesting sentiment or intention on the part of the customer. And what we saw today was we have to roll on out to the May expiration cycle to get a handle on this one. The May 2015 50 calls going up for some decent size. This accounted for a significant portion of the paper going up today in Axiall. What we saw in the morning was a 540 lot going up in 2 blocks of the May 50s for 205 paper buying. As the day went on, about 2x that going up to the tune of a little over 1,000 total on this strike. Paper buying the bulk of those. Open interest of just 12 contracts, so this is clearly open in paper. Don't know if we saw here. Let me look up really quick. Now, I don't see any stock going up with this. It looks like this one, and it pretty much went up in a big flurry as well in about a 3-minute time span. So this was a guy who was in quite a hurry to get those calls done. And looking at him here, they went out $1.85 at 225. So he's right mid-market, so he didn't need to race. But still, nonetheless, a guy who had some serious urgency here to get some upside on in Axiall. Mr. Rock Lobster, what's your take here on our friend piling in to AXLL?
One is that my first thought was like it's a tempest in a teapot trade. You know, somebody just had to buy 1,000 calls. So they bought them. And they lifted, offers everywhere and posted bids and traded through the offer and did whatever they could to get their 1,000 calls, in a thin name. Obviously, on a 40-cent wide market, I think there'll be some market makers that'll be happy to sell some of those calls. The second part is, this is kind of a Georgia. It's the old Georgia Gulf company, so it's chemicals and kind of a regular old manufacturing company, which feel like they could be in vogue for the takeover type situation. Those would be buying the 40-50 calls would be the last, because on a takeover, you don't really want to buy the out of the money calls. You want more of the at the money calls because sometimes that volatility premium tends to go to zero on a takeover. So I think somebody wants to get long potential upside speculation and I think we keep seeing like a takeover per day per industry. It is bizarre. It's not bizarre because money's only money is free right now still. And I just think somebody thinks this thing's going up in a big way. So they're buying, and all these industries that, could use oil or some sort of petrochemical to make their chemicals or goodies, could look good here if we've got, oil prices that are down 30 to 35% for the next few years. That probably is going to help the bottom line of a lot of these companies. And I think that could be what this call buyer had in mind. Possibly, potentially.
Just maybe. We'll have to roll the dice and see for certain in the coming sessions. But yes, that is a very intention. All right, moving on to our next victim / celebutant here in the old odd block. This is one we talked about a bit in the past, but it's been a while since we've caught up with them. This is Stillwater Mining Company, ticker symbol SWC, closing today just a tick, a hair under $13, $12.97 to be precise. Pretty much unched on the day, so it wasn't underlying action that drew our eye. No, it was some action out there in them puts. This is the name that does about 1,000 contracts a day, doing a whopping 8,500 a day. So some serious activity going up out here in Stillwater, and essentially almost 8,000 of that, just about 100 or so contracts shy of that, came in this pretty sizable put roll that we saw in the Nove and Dees expiration cycles. We saw the Nove Dees 14 put spread going up this morning 3,946 times for a dime paper selling. So they're selling the D's 14, buying the Nov 14, collecting a dime to do it, and doing it nearly 4,000 times. And how do we know it's a roll? Well, all of the standard indicators are there. First off, about 4,000 open on the Nov 14 strike. That's a good indicator that something is afoot there. And 16 open on the D's 14 strike. So again, rolling on out to D's, collecting a dime to do it. He's still liking his position, still liking his draw on that line on the 14 strike, which, again, pretty aggressive strike. This is the dollar in the money strike at this point. So we don't typically see guys rolling these in the monies and keeping them in the money like that. Usually they might roll them down and out a little bit, give themselves a little bit more room to breathe on the downside. This guy's saying, nope, I like where I am, a buck and change in the money, and I'm not going anywhere. In fact, I'm staying around for another month. Mr. Rock Lobster, what's your take on our friend perhaps playing with some fire out here in Stillwater?
I think Mr. Stillwater is like, you know what? I'm just going to keep selling these puts, and I'll keep rolling them until I make my money back. And that's what they're, it's our variant of the wheel trade, and that's what, they're getting a dime more than they got for the puts that they had to buy in, and that's what they're doing. It's just standard old-fashioned wheel trade, and they're going to keep it up. So, and with all the miners, it almost, who knows what gold's worth and all the rest of that. I know Tucson likes it, but they've crushed those miners to such a just to such low levels. It's hard to believe that you buy a mining company like this that pulls all this palladium and stuff out of the ground, that at some point in the future it will be worth more than it is right now with all these commodity prices trading at such low levels. So I just think I've seen a bunch of these trades, these put rolls go up in a lot of these miners, and just customers keep rolling them. Just like, okay, well, I was a little early, but I'm going to stick with it.
It's funny you say this guy's wheeling, but he's not letting the wheel kick in. He's not letting it go. He's not letting the wheel come. He's just rolling his puts.
He is not letting the wheel roll. He is just rolling his puts.
He is stifling the wheel, if anything. The anti-wheel trade.
He's doing some sort of anti-gravitational trade.
Good thing Auntie Mike Kavanaugh's on the show today. He would be deeply offended by this man who is stifling the triple income strategy. He's maintaining a single source of income, and he's happy with it, damn it.
And it ain't going to change.
No. All right, let's move on to one of my favorite ticker symbols here. Let's close out the old odd block. This is Huntsman Corporation, the Hun, ticker symbol HUN. I love it. Closing today, $26.35, up about 30 cents, or about a little over 1% on the day. And there's some interesting stuff cooking here in the old Hun. We'll kick it off with what we saw on the old site this morning. In particular, it was a size call spread that first caught our eye. But before we even get to that, let me break down what we typically see in this name and what a weird day it actually was. This is the name that does about 5,000 contracts a day. So the Hun, fairly robust from an unusual activity perspective, doing a whopping 111,000 contracts today. So size paper all over the Hun. Everyone was just lighting up the Hun today. I could say the Hun all day if you haven't noticed. And so what caught our eye first was what looked like a pretty standard roll, the Nov Feb 26 call spread going up. When we profiled it this morning, 19,783 times in two giant blocks. Has all the hallmarks of, at least initially, of a pretty sizable roll-in buy ride, essentially. So he's selling the 26s in Feb and buying back the 26s in November. Again, 21,000 open on the Nov 26s and a couple hundred on the Feb. So that's your first indication this might be indeed a roll. But Mr. Rock Lobster, I'm not sure if you noticed as the day progressed, a heck of a lot more paper piling in to the old Hun to the tune of 24,000 of the Nov 27 puts going up on about 31,000 contracts open interest, along with what looks like perhaps a near 1x2 here on the Feb 23-25 put spread going up. Looks like maybe 1x2 14,000 of the 23 puts by about nearly 25,000 of the Feb 25 puts. And all of that combined with that whopping size call spread we mentioned earlier contributed to that pretty much 111,000 contracts going up today. So size, however you want to look at, Mr. Rock Lobster, the floor is yours. You can parse it however you like, but there's a lot to parse here in the Hun.
That you know what, had I known, I do look for symbols that are going to be easy for you to match the symbol with the name of the company.
I do like that.
I know that drives you crazy.
A bit of a pet peeve of mine, yes.
I don't want you to get all tongue-tied on the show.
And, if they're evocative of some good imagery, I'll also go along with it. And the Hun wins on all those categories.
Yeah, it's almost everything you could want in a symbol.
I can just picture myself riding across the steppe, my hair flowing. Oh wait, that's another fantasy from another day. I shouldn't go into that on the show here.
I think I'm going to write a book, What We Want in Ticker Symbols.
Yes, I think that would be a very, very short book. 2 paragraphs, 2 bullet points, done. Run
all
with
done. It. Sell it on Amazon, make a fortune. Hun. So I see this. Again, Hun is a chemical company, and I think it just looks like a big roll. I calculated the yield to be about 4% for 4 months, which isn't bad. Actually, a little less than 4 months. And plus, you get a divvy, which would kick it up a little bit. So it's a reasonable kind of buy right for a kind of a stalwart kind of chemical company. The put stuff, all of it is, from what I could just see, most of the paper just looks bearish or bullish. I think they've sold a put a little too aggressive on a put sale, and now they're rolling it to February, and maybe they're just selling more of them. I couldn't quite figure it out, but it's all opening in Feb. It's opening, and it's for the most part, it's bullish paper. What can you say? So we'll see what this Hun customer wants to do, but I think they're still looking for it to kind of plod along and make decent gains, and they'll be thrilled to death.
It doesn't appear like they're. I mean, they could be. It looks like they're closing on the Nov 27 puts as well, but it doesn't look like it's a standard. It could be a standard strangle that they're closing out in Nov, but they're not rolling into a standard strangle. If anything, they're rolling the other way, which is kind of odd. So yeah, this is all sorts of weird paper here. We'll have to play watch the OI tomorrow game to figure out exactly what's cooking here. The weirder part about the Feb puts too is right in the middle of those 2 strikes, the 14,000 by 25,000 is a whopping 40,000 lot of the Feb 24 puts just sitting there on open interest. So there's some size paper open out here in Feb in the Hun, and we need to get to the bottom of it, sir.
Yeah, I mean that's what is that? It's 4 million shares, so that's 100 million notional. It's not a small position.
No, this guy is throwing some size around, and he's dancing around some very active strikes as well. His 26 calls going up one handle below the 27 strike that has 55,000 contracts open. So either there's several large players at work out here, which could conceivably be, or this one guy is really setting up something odd and elaborate all at the same time.
Yeah, very, very interesting type of pay. Again, this whole chemical industry with the oil getting lower. You would think it would continue kind of this little liftoff, and it's doing okay. But I thought, I don't think it's really I don't think it's percolated out there yet enough. So we'll see if all this stuff can get things going or not. But
all right, I'm officially calling it. This one's going in the to be watched column. We shall return to the Hun, if for no other reason than to have opportunities.
$24 stock only 2 weeks ago.
I know.
That's 10% for a little name like this.
Thing's moving. It does paper. It's got a great ticker. All the things we love here in the old odd block. So we'll keep an eye on that. Oh, also 5,000 of the Nov 25s went up today. Or nearly 6,000, actually. So there's this paper palooza out here. Paper for days, as the kids say these days. So we'll file this one in the to be watched, listeners, because we have to keep rolling with the show. But a fascinating one nonetheless. We shall return to the Hun in the near future. Meanwhile, it's time to keep on rolling into a man. Perhaps he has a fancy Hunnish looking hat of his own. We'll have to find out when we dive right on into the Xpress Block.
The Xpress Block. Brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. This is indeed the portion of the program where the Viceroy takes us behind the scenes into the land known as OX by Charles Schwab. And Mr. and Viceroy, do you indeed have any Hunnish headwear that we could go either way? We can go with a nice felt cap from the Middle Ages, or perhaps you want to go the more modern interpretation of perhaps a Kaiser Wilhelm era German spike helmet from World War I. Whichever way you want to go, sir, the floor is yours.
I'm going to have to go check my closet and see if I still have my Attila, the baseball hat. But,
there you go. I like it.
Today we're going to go behind the scenes at Schwab. I know the last handful of shows I've been talking about the fact that 3 and 4 leg is now available on Street Smart Edge, and that premium harvesting went to Schwab Mobile. But I want to talk about another Schwab application that I've been remiss that I haven't talked about it, and this was. I don't want to call it a stealth introduction because it's been out for about a year. But when I hear Andrew and you, Mark, talk about roles in the odd block, about a year ago, Schwab put a new feature on Schwab.com that allows you to roll. It's essentially a roll ticket that allows you, if you're in a covered right, it allows you to buy back the short leg and sell a new short leg and do it at a credit. Now, I know on the OX side, that's something that we've had for a while. I trade predominantly on the Schwab side, so anytime there's an innovation, I always like to have an opportunity to talk about it. I've been remiss that I didn't talk about this, but if you are trading on the Schwab side, please be aware that there is a special options order ticket that is set up for rolls, and it's there for all accounts. It's there for IRA accounts. It's there for all accounts. And again, when you and Andrew talk about rolls, the great advantage of doing a roll is a roll, doing the 2 trades, is market makers, liquidity providers look at risk. And when you're not doing something as a roll, when you're taking a covered right off and putting a new covered right on, if you do it as 2 trades, the counterparty you're trading with, which in many instances may not be the same counterparty, the buying the short back could easily occur on the ISE, and selling the new short could easily occur on the SIBO or the Amex or the NASDAQ or any of the exchanges. When you're doing it as 2 separate trades, 2 people have to adjust risk, and they're going to want to get paid a little more for that. If you do it as 1 trade, generally only 1 counterparty is adjusting risk, and the roll market is often superior. No guarantee it's going to be superior 100% of the time. But if you're on the Schwab side, look at the advanced order ticket, and the next time you're rolling a covered right, tomorrow's expiration. So I was in today rolling some stuff around. But the next time you're looking at rolling, look at using the advanced order ticket and entering the roll as a roll.
That's good for a lot of our listeners, I know, who still, for whatever reason, throw up their hands in dismay whenever their stock may be called away on their covered calls, so they do want to roll. So good to know they have that functionality on the Schwab side as well these days.
Yeah, it's cool, and it's essentially for that. We were doing some videos this morning, and one of the things we talk about, I know we've had this discussion on the show talking about collars and how no one in their heart of hearts ever wants to sell that call. But I think over the years, one thing I've learned is that most covered writers change their mind when the stock goes up. And in reality, I always talked about this when I would teach covered writing. You would kind of dig a little deeper with investors. And in many instances, I had the general impression that, in fact, they were naked writers who happened to own the stock. Now, what I mean by that is they're never going to let the stock go, and they're going to employ some rolling strategy or just getting something back for a debit. So if you are, in fact, one of those, I don't want to use closeted naked writers, but if you are, in fact, selling calls on a stock that you don't ever want to lose because of cost basis issues or you just love the stock, look at the roll ticket. It's a really clever way to move stuff up and to do it in a risk-managed fashion.
Well said, sir. Keep looking for that Hunnish headwear while we keep on rolling right on into our next segment. It's time for you guys to take the reins because it's time to check in on the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to send in your thoughts. You can do it any number of ways. You can, of course, surf on over to the mothership at theoptionsinsider.com. Leave your comments, your questions there, either on the comment form or on the feedback form on the website. We'll get those, of course, and route them appropriately. Shoot us an email, questions@theoptionsinsider.com. Just be sure to put somewhere in there question for the option block so we know where to route your question. Or you can find us on social media, twitter.com/options, facebook.com/theoptionsinsider, and stock tweets. I believe we are Options Insider. I should probably confirm that one of these days before I keep tossing it out, but I know you guys find us on there nonetheless, and I know a lot of you guys like to use that as well. All right, first question comes up from a returning victim here on the old mail block. This is Faye, handle Cuzername, something like that. He or she writes, thanks for the feedback on my Goldman trades, by the way. If you remember, guys, we discussed their Goldman trades a few weeks ago. It worked out okay, but I think I understand what I should have done now. I got a new one for you, so put your listening ears on. This came in about a week ago, I think, so these are about a week old here. He bought a weekly SPX fly. It was on the November 7th cycle, the 2010, 2030, 2050 fly for $6.80. He bought it on 11/5, so not just a few days before the expiration cycle kicked in. The fly didn't really move in value until Friday, even though SPX was slowly moving to the short strike. Trade did everything I wanted, but I thought I'd be able to capture more profit on Thursday. What did I miss, or am I just being greedy? Thanks, Faye. Well, Faye, it's a good question. This seems to be a bit of a recurring theme, not just on this show, but on our Options Bootcamp program and a bunch of others these days. People are writing in with spreads that worked, but didn't really work the way they anticipated or perhaps hoped. And that's kind of, as we've said before, kind of that moment where a lot of people start to really realize how options work in the real world versus just, you know, those P&L theoretical value graphs that people always throw up and says you put the trade on here, it expires here. But what happens in the middle is the lion's share of the activity and a lion's share of the opportunity, and sometimes it doesn't always unfold the way you hope. And you guys are seeing now that sometimes, we talked about this before, someone wrote in very recently with a spread that didn't decay, or it moved quickly, but he still had a lot of decay to come off. You have a similar problem, a condensed time frame, clearly, because it's only a weekly, but it still does unfold in the weeklies that same way. Just because your underlying moves the way you want it to doesn't mean all that theta, all that vol is going to come out right away. It's going to take a little bit of time for that to play out. In this case, you were only upset about having it move away today. That's not the end of the world. Maybe you are being greedy. If you just want it to happen on that Thursday, you got to wait a day, get a little closer for that expiration to kick in. But that's kind of the lay of the land when trading spreads, particularly when you have a kind of that slow move drifting towards your strike there, like you're saying you had here. So yeah, unfortunately, this is kind of the name of the game. When you get those moves perhaps sooner than you expect, you're not going to capture the full value of the spread. You need to let that data come out. You need to let those options kind of move to where they need to be on that proverbial expiration graph to get that maximum value. Otherwise, like we've said many times, you have to be comfortable taking some sort of percentage of your spread's profits, and that depends on your outlook and what you're thinking and your own personal needs. But if you're coming into every spread thinking I'm going to get max profit every time, even on a weekly, I think you're going to be a little bit disappointed, unfortunately. Uncle Mike, I know you trade mostly SPY, not so much SPX, but the same methodology applies here. I know you're excited about the mail block, so I'll let you have pride of place, sir. What do you have to say to our friend here, Mr. or perhaps Mrs. Faye?
Well, what I would say to Faye is that you won't be a little disappointed, you'll be a lot disappointed. What I would recommend doing, on the Options Express website, they have the trade calculator. And this is a tool with which you can plug in different days as well as different prices and that type of thing to see what the actual trade would be. And you can modify the different pricing factors of options, such as volatility, such as price, such as the time till expiration. And before I would get into any complex spread, what I would do, Faye, is use a tool something like that to where you'll know exactly what you're getting into. Because just to add what Mark was saying, if you go by what the expiration day risk reward graph is, you will be disappointed most of the time. So with that in mind, I would recommend doing that, and then do a little bit of paper trading on these in terms of trying to figure out an adjustment. What if it were to move the wrong way? How would you adjust it? What's a way with which you can do that? If volatility goes down, if volatility goes up and the market goes down, what could be a beneficial adjustment? Play with it a little bit and come up with something you like.
I think that's good advice. Obviously every broker, OX included, makes some really good tools for doing that. And when you start playing with those expiration dates and those volatility levels, it'll give you a very good understanding of how these things you typically move when the market actually does that. Mr. Andrew, what do you have to say to our friend, Mr. or Mrs. Faye? I'm assuming Mrs., but you never know.
We'll say Mrs. We'll call her Miss Faye. Miss Faye.
There we go.
One thing is, you buy the fly for $6.80, right? That's all well and good. You paid a debit for it. However, if you want to see how the fly is going to perform, what I do is I teach just look at the value of a straddle. Essentially, a butterfly, when you're trying to wrap one like this, is kind of a short straddle that's protected. Actually, I just did a webinar on this subject last night. And if you're saying, okay, well, for me to take my 680 and to make the other $13.20, that means that the fly has to expire right on the strike, okay? Also, the problem, with the SPX, depending on what the settlement was, this is a PM settle, so there wasn't any settlement risk for the weekly. But, those options, the value of that straddle, for you to get your the full value of the straddle means, of your fly, means your straddle has to totally collapse to zero. And anybody, especially let's say Longo and myself, who traded the SPX, knows that those straddles are going to last for a while as a percentage of the value of the underlying. So if you were looking at it on a Thursday and you see, wow, that SPX straddle is still worth $12, okay? That means the value of that straddle that you're short is still $12, okay? And you're not going to get any money for your butterfly until that $12 value in the straddle shrinks down to nothing, okay? It's going to do a lot of its decaying on Friday. So when you're looking at it on Thursday, you still have the overnight risk. One standard deviation for overnight risk is not small in the SPX. So that is not going to come out of the options until the next Friday. So, a lot of our fly traders, sometimes what they do to get around that problem is they'll move to make the distance between the strikes at one standard deviation or a little wider to try to juice up the amount of decay. And almost all of them take a percentage of decay and walk away from it. So if they have a $6.80 fly, they make $2.50 on it, they kill it. Because from a risk reward point of view, that's enough for them, and they're on their way. So, if you hold out sometimes too long for that last, whatever you're going to think, whatever the maximum value is, that all I say is the risk graph, when you look at those, that is an ideal situation, perfect world, everything going to zero. And as we all know in real life, few things ever really work out that way. But if you look at the straddle value and understand that that straddle has to go to zero before you make the max value on your fly, it's going to make it a lot easier for you to try to judge the decay and see when you're actually going to make some money on this bad boy.
Well said, sir. As always, have a goal in mind when you put these trades on. Take a percentage and run. If you stand there, try to be a pig and try to get that every last bit of straddle to decay out. It's going to be probably a heartbreaking experience for you. Let's see if we can squeeze in one more really quickly here. So the quick one from Kuda6. He writes, I got a question for the option block. What's an easy way to spot an upcoming dividend using options? Thanks. Well, we touched on this a few times too. The big elephant in the room, 10,000 foot, kind of the obvious way to do it is, first off, when you see these big explosive trades going up on these names. We talked about them before on this show and on other programs on the network. They're called dividend plays, dividend exploit plays, whatever you want to call them. But essentially, they usually embody a name that usually trades a couple of hundred, maybe a few thousand contracts a day. All of a sudden doing a couple 100,000, maybe 500,000 contracts, absurd numbers. And when you look at those numbers, they're usually fixated and limited to deep in the money calls, and usually calls that have a lot of open interest on them. Strikes that have a lot of open interest, I should say. So if you see one of these massive explosions of deep in the money call volume on a name that you're trading and you're trying to figure out why, or you just see these going up in general, that's a great indicator that a dividend is coming forthwith in that name, because those guys are trying to capture it using those dividend strategies we've discussed before. So that's probably the easiest. And there's some other subtle things we can get into, but that is certainly the easiest and most noticeable way to spot a dividend really quickly. Mr. Viceroy, any other advice you have for our friend here, Mr. Kuda6?
Yeah, well, I'm not sure if the question, to your point, you see the big volume. The other thing you need to be cautious of, if a stock's paying a dividend, and this happens a lot on the individual investor side, the put will look wrong. And you want to be cautious about that. Because what dividends do is they lower call prices, they raise put prices. So if you see a put premium that is somewhat out of line, especially if the thing is right near being at the money and you're looking at the at the money put call pair, the put will look wrong. That should make you scratch your head and look at when the dividend is and how large it is.
There we go. The subtle and the not so subtle way to spot these. We've talked about these before. Of course, we see that coming out of names that have recently gone IPO, just listed for the first times. They puts, a lot of people write in, hey, these puts look wrong. It's a similar scenario to a dividend where all of the cost of carry and everything else is all sorts of screwy. You see a similar scenario unfolding in names that perhaps could have a surprise dividend lurking in there, and the options are starting to price that in. So a lot of different ways to do that. The explosive way, the subtle way. The choice is yours, sir, as to what type of dividend you're actually looking for. A good question there, Mr. Kuda6. And unfortunately, that's all the time we have. Keep sending those questions in. We love to hear from you guys. We'll get to more of them on upcoming shows. But now it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we break down what we're watching for the rest of this week into the old weekend. Perhaps, Uncle Mike, we'll start with you. What is catching your eye out here for the rest of this week?
Yeah, going into next week, just continuing to watch to see if we can make more new all-time highs in Apple as well as SPY. Tonight, we're broadcasting today, or recording today on the 20th of November. I'm just curious to watch the president's speech tonight on immigration. Don't know if it's going to be too much of a market mover, but one thing that I always like to do in later hours when the president is speaking is just cuddle up with my mobile device and see what the futures are doing. So that's what I'll be watching.
I have this lovely image of you curled up by the fire with your smoking jacket on, the bubble pipe, watching the president and watching the futures on the other hand, and just very content.
What more could a man possibly need?
What more could a man possibly ask for? And Mr. Viceroy, what are you watching for the rest of this week, sir?
Macro issues. I'm looking at whether crude's going to hold $75. Whether the 10-year is going to still trade in this 230 range. And looking at the VIX, I think the VIX needs to break down a little more for this market to get out of this 2040, 2060 trading range on the S&P. So I think it's all macro here. I think Mike makes a good point too, because we're in this last, month and a half of this Congress, and we're going to see how wacky Washington can get and what they'll be doing in the last days of the session here.
All right, and last but certainly not least, Mr. Rock Lobster, take us home. What are you watching for the rest of this week into the weekend?
I am looking for new near-term lows in VIX. I'm just watching the VIX futures here at the close, and somebody put a little smack flu on them. So some of the vol futures are lower, vol future products lower. Seeing if we can just tickle that 13 handle, maybe the 12 handle tomorrow in VIX. The reality is you got a lot of good news locally, and everybody knows what's going on in Europe. They're trying to fix things. The Japanese are trying to fix things. Who knows what they're going to fix? But at least for our equity markets, I still think there's some room. So, like I said, though, I want to see people actually get out there selling some puts to get that confidence rocking again, like we had in let's say June of this year when there was a little bit more happiness going around. I think the U.S. everybody just has to adjust the fact the Fed is out of our, I'm not going to say, out of our economy, but there's no more bond buying. They're trying to look for ways to raise rates somewhere in 2015, and the global tumult's not bothering them. And I think they're trying to project confidence. And, the market hates uncertainty, but it loves confidence. And right now, I think that's what we're trying to ride. And it wouldn't be surprising to me if we set another record tomorrow.
All right, well said. That's going to do it for the Around the Block segment. It's also going to do it for this episode of the Option Block. But before we go, as always, let's check in with each of my cohorts here on the old All-Star panel, see what they have cooking that may interest you. We'll go back around the horn the other way now. Start with the Rock Lobster. Mr. Rock Lobster, what's cooking in the land of the pit?
We have our boot camp, December 10th. I think it's 6 hours or 8 hours of instruction. You're going to learn a lot about options in a short amount of time. Understanding vol, wheel trades, selling puts, good times to sell puts, good times to sell options. Understanding volatility neutral trades, delta neutral trading. How these things work. When you have fancy products like you do at OX for premium harvesting, all right, understanding what that means, how those trades work. Putting them on, how it fits a portfolio. That's what the boot camp is. It's dense. There's a lot of stuff in it. It's a very reasonable price. I think it's like $147. And it's hard to guarantee anything in this world, but if you take the boot camp, it'll probably save you $147 easy for you not doing something dopey you would have done before you would have taken it, which is basically the emails I get from our clients, which is why Option Pit keeps growing year after year. We generally are the repository of people that have tried everything else, and now they actually want to understand how options work. So the boot camp is a great way to start, and it's at a very nice introductory price, I might add.
All right, sir. Nice price indeed. Speaking of nice prices, Mr. Uncle Mike, what's coming down the pike in the land of RCM Wealth Advisors?
Once again, just to promote the futures event we have coming up in Miami on the 11th of December. For more info, go to rcmfutures.com. And Thanksgiving is coming. And if anyone who has around $500 per month to invest, I'm more than happy to work with people at that level. Feel free to give me a call in the chat before you get fat promotion, with which we have 312-212-3531, or send me an email at mtusa@rcmam.com.
All right, and last but certainly not least, Mr. Viceroy, what is coming up in the land of Options Expressed by Charles Schwab, education and live events?
So I'm going to try to not be long-winded here, but I just want to tell our listeners that if they dozed during Andrew's explanation of trading a short-dated SPX butterfly, that was the best 3 minutes of education I've ever heard. So if you dozed during that, back up your iPod and listen to it, because that was extraordinary. And I just wanted to get that in. A couple events. This Saturday, November 22nd, live, Houston, Texas, Jimmy Ruzan and the crew. They'll be at the Galleria of Houston, real pretty part of Houston. Jimmy does his live 3/4 of a day simulcast on the site. Next week, Tuesday, 11:25, Nina's going to do an introductory program. She does a continuum of these. She's going to do option terminology on Tuesday, the 25th. On Wednesday, the 26th, she's going to do a platform and site tour showcasing many of the new features on the platform. And then I'll go a little longer dated, Tuesday, December 2nd. Jim Wyckoff, who writes the well-known Wyckoff letter, is going to do his monthly and year-end futures outlook. All the events are free. Come to optionsexpress.com. Click on the education tab. You don't need to have an account. You can attend any of the education events free of charge.
All right, surf on over to optionsexpress.com to check it out for yourself. And on behalf of Uncle Mike and the Viceroy and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and for sending in such great questions. Keep them coming. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.